Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Senior Technical Analyst with Market Rebellion, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Now, if you follow along with me each and every week, you'll know that I leave my forecast lines on the chart from the previous week so we can see how those forecasts targets worked out. And right here was the line that I drew last Friday, saying that we would go down and hit that price target right there at 335.73. Not only did we do that on Wednesday, but we surpassed that. And now you can see a green candle forming right there after this gap has filled. Now, this is an interesting price formation because while that green candle is on higher volume, we still have the stochastics moving lower and the CCI is starting to pivot up. So we do have more evidence of a possible rally into Monday and Tuesday. But if you take a look at this weekly chart, you'll see that the candle is looking a lot different. We have a lower high and a lower low this week, and the oscillators are going down. So going back to my daily chart, here's my forecast for next week. I do believe that we're going to go up just a little bit, possibly bump our heads up against that moving average, maybe just above that moving average. My price target is 336.39. In fact, what I think we could see next week is a rally early on and then a pullback right to where we are before we go lower. I do believe that the final week of January will be a push lower. We'll have to see. It's too early to get the read on the charts with that, but stay tuned. Our option traders did a great job this week rolling their put spreads with cash credits in the process of rolling each one of those spreads. So congratulations to each one of our option members. Now, if we look at the Qs, ticker symbol QQQ, again, you can see that I leave my lines on the chart right here. This came down to the price target right near 273.67 and came within 22 cents of that target. And then again, we see a bounce on higher volume. So with the Qs, I think we're going to go just a little bit higher. I do not believe we're going to go over that trend line. I absolutely do not believe that. I think that trend line is in force. I'm playing the downside based on that trend line. Yes, we do have isolated long positions in energy and some other positions, but over 70% of our positions are still bearish and they're working out very well for us. So for the Qs, the upside target is 284.68. Now, if we look at IWM, this is the Russell 2000 ETF. It's a small cap ETF. You can see that yesterday right there, we hit a low of 180.78. That makes our target a hit at 181.11, so that's a hit. I'm going to erase that because it's getting in the way. Now that we've hit that, I'm going to go up with this one. Again, very slightly, because you can see down below the CCI is starting to shift, go a little bit higher. And today's candle, there was really no shadow on top on higher volume. So my upside target on IWM is 186.62. Now let's take a look at SPY. This is another one that has hit the downside target. Remember, I wasn't going big on the way down, but we came right down to that target of 387.93, hit that yesterday, and we bounced off of this 20-period moving average. Now, the oscillators are starting to hinge up here, so I'm going to go a little bit higher. I think that the spiders could go up and hit this resistance. In fact, what I'm going to do is clean up that chart, draw my resistance area first, and then I'm going to draw my zip line to match that. So I think we are going to go up to test that resistance. Upside target on SPY is 399.62. So that was another hit on the target. Now the VIX is acting a little squirrely here. We did hit the target yesterday on the VIX. See this long shadow? Let me zoom in a little bit more. So this long shadow to the upside did allow us to hit that target at $20.91. We have a pivot lower now, and the oscillators are moving lower on the VIX. Again, I think this support level on the VIX is going to hold, but next week, Monday and Tuesday, I think we'll go a little bit lower right there at 19.02. And then I think we're going to bounce from there. Again, I'm leaving that downside target first. before making that forecast after that date. You can see that in the data box there in the bottom right. That's the 23rd of this month. So that's going to be next week, and I think that we could hit that, and then we'll start to see a pivot point. Now, I have some big news here that I'd like to bring your attention to, and that is the Polycrisis. What is the Polycrisis? Well, actually, this is what I believe the World Economic Forum is actually creating. And I urge each and every one of you to not only listen to what's being said here in Davos by Klaus Schwab and other the global leaders, but you have to read into the transcripts, take them literally, listen to folks like the CEO of Pfizer. You have to listen to how they want to control the world's population. It's absolutely insane, but it is happening. And I also urge you to go online and look for these screens that they have here. These are called transformation maps. And you could take any segment within this circle and expand on it. They're actually interactive. And I'd like to draw your attention to some of the things that will unfold in the coming months here. You can see that they are putting together a global governance board in an effort to control governments around the world. Now, you have to understand these folks have a lot of money. These are the richest people in the world coming together each year, meeting in Davos. Unelected officials, by the way. They're not elected by the people, yet they are controlling very large segments of our economy, very large segments of the geopolitical world that we are living in. And when I see something like that, global governance, you could actually click on that and it'll explain the plan that they have, that they plan on rolling out. Now, if you look over here, you got capital markets and banking. Over here, you have China. They have a plan with China, and I'm going to get to that in a moment right there. They have a plan for China, and it's absolutely incredible what's happening now, literally unfolding this week before our eyes in real time. I'll get to that and show you what's happening in China. But they also are very big on this climate change. And whether you are a fan of global green energy and all that, and I am, I will tell you all, I have solar panels on my house. I believe in recycling. I believe in doing our own best to reduce our carbon footprint per se, but I don't want a government agency or a bunch of globalists telling me how I need to live and then regulating me on those counts. So it's totally up to you how you feel about that, but you have to understand that every time they make decisions to push an agenda, look, metals and mining, oil and gas, keep that in mind as I play the video for you in a little while from Klaus Schwab. They are doing their best to control these areas. And I'm telling you to keep an eye on them because it will affect our markets. It will affect our economy moving forward. Now, one of the other things that they're talking about here is the petrogold. This is their effort to remove the petrodollar from the oil markets and replace it where the exporters are planning on taking gold, which if you've been following the news, the ruble is now backed by gold. China is now backing their yuan with gold, and they're about to move in a digital format for that, backed by gold again. And once the dollar is delinked from the price of oil per barrel, you're going to see inflation here go through the roof. Even though they don't measure energy and food, we could very well be paying 2 or 3 times the amount of money that we're spending on the price of gas right now per gallon. And that's not an embellishment or an exaggeration in any way. This is real efforts by the Davos crowd to try to control our fossil fuels. Now, what's happening in China? I'm going to be putting a link in the description box below, and this is very well worth your time. It's only about 15-20 minutes long, talking to you about what's happening in China. They're literally running out of money. Hospitals are shutting down because the workers are not being paid. The police force is stressed because they don't have enough money to pay police and military. And if this continues, then the people could absolutely rise up because there'll be no police to enforce the CCP regulations on folks. Now, while the financial spin doctors are saying, okay, well, China's opening up, let's go, it's going to help things in the world economy, they don't have enough money to run things as is as a result of the 3-year lockdown from COVID. So we have not yet seen the fallout from China. Isn't it interesting how they're no longer talking about Evergrande, right? That's still a big problem. The dominoes are still going down there, but they're not talking about it. Why? Because it could spook the markets. Now, this is another thing that, again, on that video, you could see exactly what's happening with the police. Now, normally you do not get news like this out of China because they more or less stifle the video. You're not able to see live broadcasts, but there are many people with cell phones recording everything that's going on. And you have to look at what's happening in China because this will absolutely affect our economy because of all the imports that we pull in from China. And it will affect our supply chain. It will affect our food supply. It will affect energy and fossil fuel distribution. And so keep that in mind. Remember, I've been saying this for months and months. I said, watch out for the World Economic Forum, but I said, keep your eyes on China. I have not budged from that opinion. I continue to tell people to keep your eye on China, and things are absolutely developing, again, like I said, in real time. Now, here's some interesting facts that came out, and this is from Goldman Sachs, talking about how U.S. layoffs are far higher than what was suggested by initial jobless claims. Now, the JOLTS report is something that comes out by our government, and it's job openings and layoffs and such is what that report's on. But look at what Goldman Sachs is showing, that this is far greater than what was reported. Not by a little amount. This is more than double what was reported. And we've seen this before. If you look at the mishap that we had with the Philadelphia Fed, misreporting on 1.1 million job miss on that report, it's not surprising to me to see how Goldman Sachs is more or less correcting the record right here. So moving right along, if you look at what happened in the Wall Street Journal, you could see that the big banks might face a breakup. This is what top regulators say. Now remember, go back to the screen that I showed you before and look at how Davos and the globalists are trying to control banking. Again, they have their hand in this, and it's a very important story that you understand how what I believe is happening right now is that the banks are not surviving the stress tests that they put on the banks, and the regulators are saying, well, these banks are too big. We can't monitor what's going on. If we have a catastrophe, these big banks, which are the banks that are too big to fail, could possibly fail. So they're looking at breaking these up. Keep your eye on that story as well. Now, Peter Schiff has been known as more or less a perpetual bear. And, some people even put me in that category, which, by the way, I am not. For the record, I do go bullish when the signals tell me to go bullish. But Peter Schiff hit the nail right on the head when he was referring basically what Janet Yellen mentioned not too long ago about how she admitted that the only way to avoid a default on the national debt is to raise the debt ceiling. Now, this is the big debate that's going on in Washington, especially with the new Congress. And I think there's going to be a lot of debates, going to be a lot of pushback, and I do think that this story over time could put some pressure on the markets. Again, Peter Schiff has it right. If the government is allowing us as taxpayers to borrow more money from new lenders to repay existing lenders, that amounts to a Ponzi scheme, by definition of a Ponzi scheme. And he is absolutely right. And I think the house of cards is about to come down, and you need to pay very close attention to that. Absolutely. Now, remember what I said about homes a couple of weeks ago, and even last month I was talking about building permits and such. Well, this is another report that came out where it shows KB Homes. This is, again, another fascinating and shocking statistic that in the last quarter, KB Homes reported that there's a 68% cancellation rate in contracts to buy new homes. 68%. This is unheard of. This doesn't happen normally. There is something brewing here in the home buying market and real estate. And again, it seems like that story, that thread, if you will, is being muffled a bit. Now, here's another report right here. This came out recently where it's talking about the private housing building permits. Look at this drop. This is just coming in to the last quarter of last year. This is recent data where the building permits are falling off a cliff. Again, combine that with the people backing out of contracts. Well, connect the dots and you'll see exactly what I'm talking about. Now, I'm going to play a video for you that is Klaus Schwab basically warning the world about what's going to happen. Now, I find it very interesting how Klaus Schwab very confidently knows these things are going to happen. You'll hear in his own tone what I'm talking about here, but pay very close attention, and then I'm going to wrap up this video. Please, and I'm not going to beg here, but I'm going to ask you, please help us share this video. This is information that needs to get out to people. We need to make sure that our fellow family members and friends are aware of what's going on so they could prepare financially. And with you liking this video, adding comments to the video, and sharing the video, that's how we grow the channel. And again, I thank you so much for doing that. So let me play this video for you, and then we're going to call it a wrap. Have a great weekend.
We do not yet know the full extent and the systemic and structural changes which will happen. However, we do know that global energy systems, food systems, and supply chains will be deeply affected.